Welcome back, everyone. Today, we're diving deep into two of the most powerful pillars of any business, financial management and production management. Think of it this way. They're like the engine and the fuel of a car. You can't have one without the other. Ready to see how they work together to make a business unstoppable? Cello, let's get started. All right, let's start with a little thought experiment. Just imagine this. There's a brand new sneaker company, and their shoes have gone completely viral. Every celebrity wants them, the orders are pouring in, but there's a huge problem. They don't have the cash to buy the raw materials, like leather and rubber. Now flip that scenario. Imagine a different company with tons of funding, but their factory is a total mess. The shoes come out looking weird, the quality is terrible, and they're always late on deliveries. So what do you think? Is either one of these businesses going to last very long? Yeah, you probably guessed it. The answer is a huge no. And that's exactly why we're focusing on these two areas today: finance and production. They're the bedrock, the very foundation of any successful business. If even one of these pillars is weak, it doesn't matter how great the idea is, the whole thing is going to come crashing down. So, here's how we're going to break it all down today. First up, we'll see why finance is called the business lifeline. Then, we'll do a deep dive into Pillar 1, managing money. After that, we'll get our hands dirty with Pillar 2, making products. Then we'll talk about the power of teamwork and why these two departments have to be best friends. And finally, the most important part, exam prep, where we'll get you ready to ace your tests. Sound good? Let's jump right in. Okay, let's get into our first section, the business lifeline. Now, before we start talking about how to manage money, let's just take a step back and ask a simple question. Why is money, or finance, so incredibly important for a business to even exist? Let's find out. You're going to hear this phrase again and again in your business studies, and for a very good reason. Finance is the lifeblood of business. Seriously, this isn't just some line you need to memorize for an exam. It is a fundamental truth. So make sure you really let that sink in.
And this line right here explains it perfectly. जैसे इंसान बिना खून के सर्वाइव नहीं कर सकता, वैसे बिजनेस बिना फाइनेंस के सर्वाइव नहीं कर सकता. Think about it. Blood carries oxygen to your brain so you can think, and nutrients to your muscles so you can move. In the exact same way, finance pumps money to every single part of a business. Marketing needs it for campaigns, R&D needs it for new tech, HR needs it for salaries. Without that flow of money, the whole system just shuts down.
So, we've established that finance is absolutely critical. Now let's move on to our first big pillar, managing money. This is where we get into the real core concepts of financial management that you are definitely going to see in your exams, so pay close attention. This is where the practical knowledge begins. So what exactly is financial management? Well, the official textbook definition is the process of planning, organizing, and controlling the financial activities of an enterprise. So let's break that down. Planning means creating a financial blueprint for the future. Organizing is all about arranging the resources to make that plan happen. And controlling means checking up to make sure everything is actually going according to that plan.
But let's make it even simpler. Simple words में, पैसे को सही जगह लगाना और waste होने से बचाना. That's it. Imagine a startup gets 1 crore in funding. They could blow it all on a super fancy office. Or they could use that money to improve their app and run some smart marketing campaigns. Financial management is all about making that second choice. It's making sure every single rupee works hard to create more value.
So what are the main goals here? Well, you can think of a financial manager's job as asking 3 big questions every day. Number 1, proper utilization of funds. Is our money just sitting in a bank account doing nothing, or is it out there making more money for us? Number 2, profit maximization. How can we get the absolute best return on our investments? And number 3, maintaining liquidity. Do we have enough cash on hand to pay salaries and bills next month? That last one is so important. And I really, really can't stress this enough. Agar cash flow ruk gaya, to business ruk jayega. You've probably heard of Kingfisher Airlines, right? On paper, they had assets worth crores, airplanes, a huge brand name. But they didn't have enough liquid cash to pay for day-to-day things like fuel and salaries. And what happened? The entire airline was grounded. That is the incredible power of cash flow. So where does all this money come from? Broadly speaking, there are 2 main sources. First, you have internal sources, which is money generated from inside the business. Things like the owner's capital or retained earnings, that's profits that you put right back into the business. The good thing? No debt, you're in full control. The bad thing? It can be limited. Then you have external sources, which is when you borrow money. Think bank loans or debentures. The pro, you can raise a ton of money quickly. The con, you have to pay interest and you might give up some control. And here's a big exam tip for you. The difference between internal and external sources is a super common question, so make sure you know it well. Basically, everything in financial management comes down to making 3 crucial decisions that will literally decide the future of the company. First is the investment decision. Where should we put our money? Do we buy a new machine or open a new branch? Second is the financing decision. Where is this money going to come from? How much of our own cash should we use, and how much should we borrow? And finally, the dividend decision. What do we do with the profits we made? Do we give it to shareholders, or do we reinvest it in the business to grow even bigger? These 3 decisions change everything. Awesome! We've just nailed our first pillar, finance. But like we said at the very beginning, having all the money in the world is only half the story. If you can't use that money to efficiently create an amazing product, then what's the point? So let's shift gears to our second pillar, production management. So what is production management? Well, you can think of it as the art and science of turning basic raw materials into finished products in the best way possible. It's really a process of transformation, right? You take something with low value, like a bundle of cotton, and you convert it into something with high value, like a cool designer shirt. To put it even more simply, production management is raw material ko useful product may bidalna systematically. And that word, systematically, is the most important word here. This isn't just about randomly making stuff. It's about doing it through a carefully planned, organized, and controlled process so that you get consistent quality every single time. And just like financial management, production has its own set of clear goals. The best way to think about them is from the customer's point of view. A customer wants the right quality product, in the right quantity, delivered at the right time, and all for a minimum cost. If you mess up even one of these 4 things, you're gonna have an unhappy customer. I mean, imagine ordering a pizza that shows up cold, it's tiny, it's an hour late, and it's super expensive. You'd never order from that place again, would you? So how do we actually hit all those targets? Well, it all comes down to 4 core functions. First up is production planning. This is where we decide what to make and when to make it. Then comes routing, which basically creates a roadmap for the product, its journey from raw material to finished good. Next, we have scheduling, which creates a detailed timetable for that entire journey. And finally, you have the most critical step of all, quality control, which makes sure every single product is perfect before it goes out the door. And trust me on this, quality control is completely non-negotiable. Why? Because agar quality kharab hui, to brand image kharab ho jayegi. Just think about what happened with the Samsung Galaxy Note 7. A few faulty batteries led to a massive global recall and seriously damaged their reputation for years. Once you lose that trust with customers, it is incredibly hard to earn it back. And you know, in today's world, it's pretty much impossible to talk about production without talking about technology. Modern machines, automation, software, they've completely changed the game. The perfect example is an Amazon warehouse where you have robots whizzing around, sorting and moving products. That level of automation is the reason you can get things delivered in just 1 day. And what's the results? A production process that's way faster, much more accurate, and a whole lot cheaper. Okay, so we've looked at our 2 giant pillars of business, finance and production. But here's the big question. Can they work all by themselves? Can the finance team run the company alone, or the production team? Of course not. In this next section, we're going to see the real power of teamwork and why coordination isn't just nice to have, it's mandatory. This slide shows a classic corporate disaster. Let's just walk through this chain reaction of failure step by step. So event 1, the marketing team is brilliant. Their new campaign goes viral and suddenly there's a huge demand for the product. But then we get to event 2. The finance department messes up. They delay releasing the money needed for raw materials, which leads to event 3. Production gets delayed. By the time the product is finally ready, the buzz is gone. Customers have already moved on to the next new thing. One department's mistake caused the entire company to fail. And that right there is the main takeaway. हर functional area को एक दूसरे के साथ balance में काम करना होता है. Finance, production, marketing, HR, they are all part of one team. If they don't coordinate, it's like a cricket team where the bowler and the fielder are arguing with each other. And what happens to a team like that? They lose the match. Simple as that. All right, we have covered a ton of ground today. So now let's switch gears and get to the part you've all been waiting for, how to absolutely smash your exams. In this final section, we're going to do a quick recap of the key points and look at some questions you can definitely expect to see on your paper. Okay, rapid fire revision time. Let's go. What's finance? It's money management, planning, organizing, and controlling. What are the two sources of finance? Internal and external. What is production? Converting raw materials into finished goods. What are the key functions? Planning, routing, scheduling, and quality control. And what's the golden rule? Coordination between departments is key. Got it? Perfect.
Now, let's look at some questions that are very likely to pop up. When they ask you to define financial management, make sure you give the textbook definition, but also explain it in your own simple words. For sources of finance, give examples for both internal and external. For production functions, explain how each step logically leads to the next. For that classic lifeblood of business question, use the human body analogy we talked about. And when you're asked about coordination, use that breakdown chain example to show the terrible things that happen when it fails. If you can answer these questions with confidence, you are going to be in fantastic shape for your exam.
And that is a wrap for today. If there is just one thing that you remember from our session, I want it to be this. अगर finance strong है और production efficient है, तो business powerful है. When these two pillars work together in perfect harmony, they create an unbeatable foundation for success. Thanks so much for tuning in, and I wish you the very best of luck with your exams.